Bitcoin's on a relentless charge to a new all-time high, just $3,500 away from that price target of 109. As we left off on Friday, it was at a stablecoin price, 103, and as we get very close to this weekly close and the daily close, it looks like we could be breaking past the 50% level right here at $105,000. Now, what that means, we'll talk about in today's video: potential price targets to the upside, and then a look back at the neutral, weak, and strong areas for Bitcoin. Along with that, we've also seen news in the last 24 hours that Moody's have now downgraded the US, and it seems like this has caused that short-term volatility for Bitcoin to break up again now past 106 as I'm filming this. So quite a lot of volatility today. We'll cover off the analysis and then recap it at the end of the video. Hit the like, subscribe to the channel if you're new here. We cover everything in the traditional finance space: the stock markets, cryptocurrencies, commodities, and of course, the real estate cycle, this winner's curse phase, where we continue to see prices escalate even further, higher and higher prices, especially as you guys have seen now on the S&P 500 in the face of a ton of fear. So Bitcoin, let's have a look at this while the market is very, very hot. 8 minutes to go here on the daily close and the weekly close. We may, in fact, have the highest weekly close in history. Now, the benefit to this, as I was talking about in the intro, just looking at the breaking of the 50% level here. This is on the 3-day chart. This is the white line right here. A break and a close above this level shows even more strength, and then increases the probabilities that we are going to take out the high here at 109.5, probably take out the 111, and over the coming weeks, and I'll talk about that in just a second in terms of how many weeks we have left to get to this point based on the probabilities of history, even increases the probabilities to get to that 115 to 117 level. So that's that 100% range of the first range out. Now, you might recall going back 3 weeks now, we watched the signal here. We have 1, 2, 3. This time we used the 3-bar signal to identify strength, and this was strength on a weekly chart. So very strong move out of the low. We had 3 bars that were up, so higher highs, higher lows. Again, you guys that have been following for some time know we used this at the top. This was December 2024. And basically through here, we had 3 bars down. This was on a daily chart, which said, it seems like the momentum is shifting. It's probably going to slow down. And even though there was a lot of market sentiment saying that this time is different, Trump's coming in, prices are going to run to 150 grand. This is just inevitable. It has to happen. And memes were going off and everything was going off. This was December, January, remember? It didn't happen because, at least obviously from my opinion and my analysis, and I guess that's why you're here as well, most of the time it works out. Sometimes it doesn't. But this signal has been really, really evident to help us with the direction of the market. You had 3 bars down, lower highs, lower lows, forget the green, call it a red there. And that stopped the market dead. It did it in December. It did it in March. We had it again at that top. And that led to a long time underneath the all-time high. That was nearly 8 months in the case of 2024, 1, 2, 3. And then it basically went sideways for that whole period until we finally got a nice move out with an overbalance in time and price. So we got it again at the top. We've covered that. And then out of this low, we had those 2 things. So we had the strength on the overbalance in time and price. That's one. If you want to learn more about this, because it will be extremely helpful for your long-term trading, your long-term investing, not just the short-term stuff, but you're positioning your portfolio. Say you want to get into the stock market and you're unsure, are we seeing a massive macro low? An overbalance in time and price is really helpful. Check out TIA Premium. Link is in the video description. Tons of courses to get through, plus the community that you can chat with and check out other results here, whether it's short-term, long-term, all for your different portfolios, cryptos, stock market, real estate. This isn't just an altcoin space, because eventually altcoins will be dead and you've got to look at where you're going to be positioning your money, putting your portfolios. So 106.5, 5 minutes to go here. Coming back to the overbalance in time and price, we've got that on the move up. We had the 3 bars up, this time on the longer term basis. So that's on the weekly chart here. And 5 minutes to go, we keep going higher and higher here. Probably the highest weekly close in history. So over to the statistics for the weekly chart, looking at what are the chances that we're going to see further upside. Because of course, things get really heated. We see the emotion come into the game, and it often happens, or almost every single time, around a top. That could be a local top. Local just means like last time where you had a peak and then you had a bit of a run up a little higher, and then basically the market had corrected for 77 days, about 11 weeks, and here we are at about 16 weeks underneath the old all-time high. So it's just over 4 months, or coming up to 4 months now. How much longer could this move go? Looking at history, and we've got the statistics down below, the number of bars to the upside, and this is on a weekly chart, has an average of 2.6. We have a median of 2 and a maximum of 8 weeks. So this is in a swing chart, Gann Swing Pro. Links to that, again, video description, but enough of that. This is just looking at how often this can happen, because pretty much around those peaks, this is the time when everyone thinks it's got to go further. And I post a lot about this on X. There's just a ton of bull-tard posting around those points. Now, of course, that could be a few weeks away from a top. It could be at the top, but nonetheless, it's generally around the price range of that top. And because people, if they find it quite difficult to separate themselves from the emotion and the price chart, that's where you can think, well, look, we're just starting to see the signal here, say for November, and then it goes sideways for the next 2 months at those price points. And maybe we're in something like that now. So here we are, we're at 5 weeks to the upside. Last time into that peak, we had 6 weeks running into that top. Then in the March top, we had 7 weeks to the upside. Come back to this, we can see the maximum was 8 weeks. We got that 8-week move out of the October period, 8 weeks. And then basically the only other time we saw that in this cycle, so this is now 2.5 years old this week. This bull market is 2.5 years old. You have 6 weeks again. So just from that low in December to that peak in January, February, 6 weeks. So it is rather unlikely that you would get anything more than, we've seen it once, 8 weeks, but generally if this is going to extend, you'll see 6, we've seen 6, and we've seen 7, but even if you got out at the 6th week, the 7th week didn't even matter because it closed below it. And look at the 8th week, you had those 2 extra weeks there, and then it stopped dead. So in each of these occasions, 6, 7, 6, should we get this, and then we get a 6-week up, you have to look at the numbers, and that would suggest that we're getting close to, if not, around a period that the market needs to at least pause. You can see like it got here at the 8th, it paused. And that happened for 1, 2, 3, 4, 5, 6, 7, 8. Then it started going on the 9th, so that's 2 months. And then again, 6 weeks up, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, and then it broke down again, just over 2 months. And then you had that was the 8th. Here's the 7th. Well, we know about the 7. That is a long time. Like I said, that's about 8 months underneath that point. Am I saying this time's 8 months? Of course not. The bull market's potentially going to be over for Bitcoin at that time. That's my opinion. You can have your own. That's fine. So I'm just erring on the side of caution here as the market continues to rise. Maybe we do get this sort of 6-week up, big move. It takes everything by surprise, and then we have a bit of a pause, okay? So that's just looking at the statistics. Does it have to happen that way? Of course not. Anything can happen, but I'd rather just work on the basis of those statistics because we haven't necessarily seen the markets go much further than that 7 to 8 weeks to the upside. We're basically seconds away now from finishing our 5th week. Should this push a little higher in the next couple of minutes, that'll give you the 6th week up, and then you start to work your way into the peak of the statistics. This nonetheless is a good sign. Closing at least now a day, 9 seconds to go, above the 50%, provided this doesn't dump $1,300 in 3 seconds. Then we got the 50% above that level. We've had higher moves up. There it goes. We got the close. So weekly basis now, that's the close there. All-time high weekly close, which now increases the probabilities that we go for another test of the highs here, 109.5, probably 110. And like we looked at with the statistics, maybe another week to 1 to 2 weeks to get to that peak based on the stats. So enough on the stats now. Let's bring it back down to the daily. We looked at the longer term here. The neutral zone wasn't met. We stayed in the strong zone, and fortunately, the market didn't drop back into the weak zone. So those price targets, again, obviously the current high here at 109. I'm not as interested in the 111, but more so somewhere around the $115,000 to $117,000 area now for BTC. I'll come back to the things to pay attention to on this move up. In particular, the crypto data, looking at the volume and the lack of interest at this point. It's not the end of the world for this move higher, but something we'll come back to in a sec. First thing I want to cover off is the traditional finance space now. We had the downgrade of the US credit ratings, essentially have put a bit of fear into the market. For the news headlines coming up this week, nothing too much to be concerned about with the US apart from Wednesday morning, and for us here in Australia, actually Thursday night here for us, you got the unemployments and the PMIs, sorry. Nothing too crazy here. It might shock the market for a little bit, short-term volatility, but nothing too crazy. For the Aussies, cash rate coming up. Do you think the cash rate's going to get cut here? A lot of the market does. As for the cycle on the S&P 500, this red line is the cycle we've been following now, and through this period is basically a bit of a chop. It could be time for that chop based on the move out of the 5-year cycle, looking back to the COVID dump and then the bounce out of that level. I guess the positive here, or the bullish side, is that it seems unlikely that we'd get some significant corrections that would take out 50% or take out those previous lows. That's just looking at the probabilities based on where we've come from, and I guess what the market is expecting, or they're hoping to keep shorting this thing all the way down. Doesn't mean we can't get corrections. And in terms of percentages, from this point down to those previous resistance levels, which may become support, you're looking somewhere around, call it around 4%. Then down to the 50% level, that's around 7%. So it's still pretty significant if it gets that far, and it would still remain in a bullish position. It's still holding above those previous levels. And so that would then, I guess, set it up for further moves to the upside, which also play into, of course, the 18-year cycle. Nothing has really changed at this point. This is the 18-year US real estate and economic cycle. I don't know how many times I talk about this. I've seen this come up now on a lot of other videos, and people keep referring back to the Aussie market with this. It's not entirely correct. The Aussie market tends to lag. So just for the Aussies here, doesn't mean that the Australian real estate is going to peak in 25, 26. We're probably going to peak just slightly after that. It generally lags about 6 to 12 months. So we'll keep watching out for where the US peaks, and then we set that countdown for the Aussie market. Doesn't mean it's going to collapse like the US. No one knows yet. Let's see how far the thing runs up, but it's probably a good time to start scraping in your debts, whether you're in the US, the UK, Australia. Just start to lower your debts. Don't go crazy towards the peaks. It's the same thing that happens with crypto, altcoins, Bitcoin. People start to get really leveraged further up the market goes, and it's not the way to do it. Okay, so in terms of the cycle, we've got some updates now for the TIA indicator suite. Some amazing updates, actually. Looking at the composite cycles that we have here, we can move around now the actual line, and we can start to position a forecast a little more accurately into the future. The forecast still remains May, end of the month, as we're in now, maybe a little bit choppy here. This is for the stock market. You can see S&P 500, how that's going to affect Bitcoin. It seems like Bitcoin's been the run. People are running back to that for the safety. We've got the move up now. Look at that. The indicator line just changed as I'm filming this. I'd love to see that. And we've got now another week up. So that takes us into the 6th week up. Doesn't mean that it can't come all the way back down and close lower. I just did that for an effect here to show that it could come all the way back down, but maybe it's just a little bit shorter. Nonetheless, let's move on back to the indicator predictive cycles here. And June, which is where I'm getting to, is still looking like that period where we might see a larger correction than what we have seen through the month of May thus far. So that's just taking it out towards mid to end of June. Doesn't mean the market's over, but just that slightly longer correction there. The other things that are showing up as further weakness to the US economy, this is not to say that we're going to a recession in 2025, but just further weakness here, are the bonds. And should this play out, 12 more days to go to finish off the month of May, a close here, or even a few points higher at 113, this would be the second lowest monthly close since the pre-GFC peak. So basically the 2007 peak. So that means the bonds are coming down and at the lowest level since then, or the second lowest monthly closing level. The lowest so far is only October 2023. It's been rejected a few times here off the 50% level of this range down. And that would, I guess, put the probabilities in favor that you'd see further downside, but you've still got the support here at 107. So I'm looking for a clean break of about 103 from this point. That would then put pressure back onto the markets, especially the Fed, to continue to raise interest rates, or at least hold them where they are, which then puts pressure on to the US economy and the real estate market, and that could lead to some sort of, peak cycle ending move here, where you would then see prices start to come down. So this problem now seems to be the pressure point for the economy. If you see a break and holding above about 4.8%, that is going to be very, very critical for the entire economy. Doesn't mean Bitcoin can't keep going up, but it's probably more likely a ticking time bomb over the period into the peak that we have been watching here for years on the channel, coming towards late 25, probably into 2026. You won't see a peak and a collapse at that point. The crash will come after that. Okay, that's what we've looked at all the time. But these would be the signs that you're seeing a slowdown of the economy overall. Gold also just holding above the previous top, but it has had a significant slowdown from when retail got absolutely crazy about it in April, saying all sorts of things. Gold going to $5,000 an ounce. From that point, from those headlines at the peak, collapsed $360 down from the high, which is the largest correction, going all the way back to the correction in 2022. There you had your roughly $300-400 correction. This is now the largest correction in that entire period. So there's a slowdown there with gold. As for Bitcoin, it's continued to climb higher. Now let's take a further look out on the monthly chart here. As Bitcoin continues to climb 107, where is this going to end on the monthly extensions? I'm looking somewhere towards still around the 130, provided we get a close above the 104 in the next 13 days. So that is the 50% level for the monthly extensions here. We get closes above 104.5. That's going to put it in favor. That would see around the 130 level. And if Bitcoin was to get to the 130 level, that would put you at about an 80% increase from the low, and again, $60,000 in the rise from that low. Bitcoin has done this twice now. $60,000 exactly from the significant low in August to the January 2025 top. It did it again from the all-time cycle, the cycle low here to the March top, 58,300. That's happened twice already. Can we see it happen a third time? That would take you to around $134,000. If it were to extend and do more than what it has done in this bull market, that's when you can start looking for your $140,000 plus price targets. But if you're just going with the probabilities from what's happened in this cycle already, it's unlikely, but not impossible, especially as we lead into the peak, leading into this final move. Final moves, we're only 1 month up in terms of the swing. So we do the same thing like we did with the weekly chart there, and the swings now in the monthly stage, the monthly maximums that it's done. We saw 6 months up into that first peak, and we saw 4 months into that second peak. So can it do it again? 4 months, where would that take you? Let's do the count. 1, 2, 3, 4. That would take you to August. So now that gives us a bit of a time and price target. That would seem like a rather short cycle for the masses, but it would still remain in a right translated cycle. So at this stage, we're looking out towards Q3 for the first signs of a peak. Yes, we have to reassess at that stage. Do we continue to see strength in the market? Does it look like there's a bit of weakness coming through? And then we can start to extend out. But at this stage, we're 13 days off June, which is the last month in Q2, which then could take us out into that Q3 price target around that July, August period. Now, while Bitcoin is going up, altcoins have not been moving as well. This is the total 3 market cap, excluding Bitcoin and ETH, but including the stablecoins. This week, it closed underneath the $900 billion level, while Bitcoin, of course, is just a couple of grand off that all-time high. So we're still seeing the strength in BTC, the weakness in altcoins, and again, further slight strength there in the dominance. But again, the weakness here through the altcoins have also come through for the major alts. Their BTC pairs are down, and ETH BTC pair is also down. That is probably due to, well, more strength in the Bitcoin chart, and there's more signs of strength there. And the USDT dominance has also continued in its rock and a hard place. After it broke down on May 8th, underneath both 50% levels we're watching, one at 4.95, the next at 4.75, it's basically been in a bit of a churn here for the last 10 days, coming into the 11th day. The positive, at least in the last 24 hours, is it had a lower close, but again, it was unable to get above the all-time support line. So at the moment, we're seeing further upside from BTC, but the alts are just holding steady, which is showing up here in the USDT dominance, that the dominance is weakening, but not as fast as at least I think it needs to, in order for that money just to flow out. Basically, more people to feel less scared, come back in, risk on, like all absolute degenerates into the risk on space for altcoins. So that's why I'm still very cautious on alts, because we haven't seen a breakdown yet of the all-time support. This support line goes all the way back to the previous Bitcoin all-time, the 2 previous Bitcoin all-time high cycles, 2017, 2021, even the April top in 2021 before the 55% correction that held it as support. You also had the top there in June when Bitcoin ran up from like $4 grand to $14,000. That was also a support. We had the all-time high in March. That was also support. And the only time we've seen any potential of it breaking down was back at the last peak, December and January. So unless this breaks down, you're probably not going to see that all-out ridiculous degeneracy for altcoins. So stay safe when you are trading altcoins. Now, I thought that was a good segue to TIA Premium, but I'll just show off the results here again for the guys. They're doing their short-term stuff. Sui, Sol, Moon Degen, Hype, getting into more longs here on Fartcoin, Rune, and Sol. So congrats on you guys. I'm sure there's more of you that are doing big things there. Be sure to post your results, and you can check this out for yourself for free. Trading results after you've subscribed to the free report. There'll be a link to that as well. So the crypto data over the last 24 hours has dropped off a little here for the Google search volume. You can see Bitcoin is down to 18 and crypto is down. You've got the exchange volume going down from the 15th, having a little peak there. 16th and 17th are down. The liquidations are at $500 million in the last 24 hours with more of the longs. We're seeing Bitcoin continue higher here, 106, 107 in the last couple of minutes, but the altcoins haven't continued higher. So we still don't have that all-out degeneracy back. You can see that it hasn't come back in the search volume yet. The exchange volume, although it's put in a higher high and a slightly higher low, it's a good sign early on. It could still be a little time to go here. Now, the last thing you want to look at with the sentiment is the market sentiment here with the fear and greed. So again, in the last couple of days, we've seen it hit 74, 74 and remain there for the last 3 days. So that's not a bad sign. It has put in higher lows, and ideally this thing can hold out at the highs for a bit longer, and that then takes us back into the time frames of the weekly chart as well that we're looking at with the 6 to potentially at a maximum 8 weeks to the upside. So everything's riding on now this last couple of weeks of May, whether it can hold the gains that it's had above the 50% level of 104, 105, closes underneath that are going to trigger further downside, potentially breaking the 101 level that we've seen as support over the last week and a half, and then coming back into those high or mid $90,000 as well. ETH that has pulled back had a reasonable close here, but it still was not able to get above a significant 50% level at 2,750. So that was the 50% of the decline. It's in a relatively good position here with an overbalance in time and price on the USD chart to the upside, holding above the diagonal as well, 50% levels at 2,000. So it's not in the strongest position, but at least it's remained above 2,200 and the 50% level at 2,000. The 2,200 were all of these previous lows that you can see on the chart. And that's where it needed to get back to. It did it on some strength, was an abnormal bar, so keep paying attention to that at the moment. Solana also hit the 50%, got a daily and weekly close above that level at 172, made it in just at the closing bell, but still below 195. And you can see that that's still in a weaker position of the downtrend, just like ETH, whereas ETH is at that 50% level. SUI, on the other hand, has closed above that 50% level of the downtrend, so it's in a stronger position, even though it's just a touch under the $4 level. Also got rejected at the 50% extension, whereas in all these cases, the altcoins have been rejected at this 50% extension, whereas Bitcoin closed above it, and at least in the last few minutes, has continued higher. And the last alt here is XRP. It has also been rejected at the 50% level again. So there is still, in the majors, weakness for the alts, strength in BTC. Where you choose to put your money is entirely up to you, but you can see it cleanly on the chart where the strength and the weakness lies. Thanks again for joining me on the channel. Make sure you hit the like and subscribe button. I'll be back with you tomorrow for another update of the markets, especially as the stock markets are looking relatively interesting after a little bit of that moody news in the last 24 hours. Do we start to see this churn sideways? That's what I'm interested in now. See you back in the next video. Till then, take care and peace out.